What is good, traders? It's been a while. In the last videos, we talked about implementing strategies into PineScript and TradingView, but I think I've mentioned quite a few times that PineScript and TradingView do have limitations. Now, those previous videos were an amazing introduction in the world of machine learning, in the world of leveraging language models to actually become a basic programmer. Now I think it's time for something a little bit more advanced. And with a little bit more advanced, I mean we are going to straight up be coding Python. If you guys do not really know what Python is basically a programming language which provides you with a really strong framework that you can process data in, do analytics with, build machine learning models on, build strategies on, and connect to most of the popular trade platforms like NinjaTrader, MetaTrader 5, MetaTrader 4, and so much more than that. So if you actually master Python, you do not really have to master anything else, because Python provides you a super cool framework that you can utilize to basically do your research, do your optimizations, build your strategies, optimize them even more, do your backtesting, do your forward testing, your paper trading, demo trading, whatever you want, and then also eventually live trading if you see that your strategy has proven itself. Now, this brings up a lot of question marks and feels a little bit intimidating to a lot of people. And that is why I created this video. I'm going to show you that it's actually not too difficult to get a strategy, optimize the strategy, and then test if this is actually a profitable system. Now, in this specific video, we are going to basically deliver a profitable system by using one indicator, the RSI. And I have done all of this by leveraging a language model like ChatGPT and nothing else. You can literally do this with ChatGPT. Just give it a few prompts, go back and forth, and you will be able to build a similar system. But as always, I will include all of the code of everything that we're going to be doing in Discord. So just go there and you can take a look. Now, let us jump right into what we're going to be doing today. We are going to cover a strategy optimization process. So if you want to get started with this, there are a few things that we need to do basically. We first need to define a strategy. Very logical. Then we need to prepare some data. Usually our data is going to be in the form of candles or other price versus time data. Then we are going to implement our base strategy. We're going to define optimization parameters. We are going to perform a grid search between those optimization parameters, which basically means that it's going to iterate over all of the possible combinations of these parameters and then see which yields the best results. Afterwards, we're going to have to validate those results. We're going to have to analyze how robust the system is. And only then can we start to think about risk management, final evaluation, and continuous improvement. We're going to be able to make it to step 6 in this video. And then later on, I am going to stack on 0.7 till 10. But from 0.7 till 10, we need to be very sure that we have a valid system. And usually from step 1 to 6 is going to be the most work, because you are going to have to find a system that actually yields very good results. And we're going to talk about what exactly a good system needs before it can actually classify as being a good system. Alrighty. For setting up your environment, I'm going to leave this on the screen. I'm going to talk through it really quickly. Yeah, you basically have to follow these steps and you can set it up. But you're going to need a few things. All of those things are completely free, by the way. So you can set this up on your machine, whether it's a Mac or a Windows. It doesn't really matter. You just follow these steps. You install a few things and you're basically good to go. So you have to install Visual Studio, which is an IDE and is going to allow you to actually edit and create Python code. You're going to set up a virtual environment, which will help you isolate projects. You are then going to create and open a Jupyter notebook in Visual Studio Code. And the Jupyter notebook is basically what we have open. We can basically write Markdown and also add code to one single file. You can run all of these, visualize the results in between, so you do not get a bunch of annoying errors that you have to paste back and forth into a language model like GPT, and you can continuously work. And then also some tips right here for using Jupyter notebooks in Visual Studio Code. So if you want any of this information, feel free to pause anywhere and just get it set up. So I am going to go through the entire process of everything that we're doing so you understand exactly what is going on, and I'm going to provide all of these code blocks in Discord. So you can literally copy paste it, run it yourself, test it out yourself, make changes, change the pair, change the dates. You can do everything. And I've also taken the liberty of commenting everything, of course, with the help of GPT. First things first, as soon as you have your virtual environment, you have your Python and your Visual Studio Code ready to go, you're going to run pip install and you're going to install the following packages. Now, these packages do everything from data transformation to plotting charts to basic optimization with machine learning, Y finance for the candles, stuff like that. We will cover them step by step. So we've arrived at the first code block right here. So The only thing we're going to be doing here is just setting up our settings. We're going to do some imports. We're going to use all of these packages in the following code blocks. And that is exactly how Jupyter Notebook works. So you do an initial setup, and then everything you set up here can be used in the next code block or in the code block all the way down there. You just have to do it in a logical, chronological order. So all we really did here is do some imports, set the plotting style, and then did some more changes to the parameters of the plottings. And the plots are basically going to be our charts. That's it. And right now, as you can see, title says it, we are going to get some data from Yahoo Finance. And the data is basically just going to be candles. We're just going to grab some candles from Yahoo Finance and we are going to process those. The symbol that I decided to use for this particular video is going to be Apple. And I use this because most of you guys know me as a Forex/futures trader. Well, it works everywhere, right? The market books how the market books. And when it comes to machine learning, it doesn't really matter what you trade. All that matters is that you can, spit out a valid system and get that to trade for you. So what I personally trade doesn't matter, and that is why I decided to go with Apple. So we define a start date, we define an end date, and we ask it to download the data from Yahoo Finance. Now, of course, there are limits on this. There are a limited amount of candles that you can fetch in one go. You can implement a little system if you ask GPT to fetch more data in chunks. But for now, I feel like data from 2018 up till today is definitely going to be okay. Once that's downloaded, when we execute this, we can actually see that we receive all of the candle data. So as you can see, there are daily candles that we can see. We get an open, high, low, close, and also volume printed right here in this grid. And of course, it contains right here 1,800 lines of raw data from Apple. And if we then plot this on the chart using one of our packages, we can see that it looks something like this. And that is all done with this little chunk of code right here. As you can see, beautiful plot from 2018 all the way up to today, 2025. Now, we're going to define a really simple RSI strategy. Now, I myself am not a mathematician, so I'm not going to delve into depth on how this was calculated. I used ChatGPT to do this for me and, of course, some packages. So this is just how you get the RSI going. And then, as you can see, we get some data. Now, of course, we want to validate that this is actually a valid RSI. And you can do this by opening TradingView, or you can do a plot right below here and just compare how does the RSI look compared to the price data. So all we do right here is we plot the RSI, we create a subplot for the price, we create a subplot for the RSI itself, and we basically plot both. So right here, what do we see? We see the Apple stock price. It's basically the same chart as the one we had above, right? Where we validated that the data that we fetched was indeed that from Apple. And then right here, we can see the RSI, and we even have the overbought and oversold thresholds printed right here. And when it is overbought, we can see that it even fills it in with a nice red color. So this looks pretty good to me. This makes sense as an RSI. I validated this with TradingView as well, and it looks very correct. So now we need to create a very basic RSI trading system. So we create a little method right here, which says implement the RSI strategy. We define an overbought of 70 and an oversold of 30, which basically reflects these lines. So everything is oversold below the 30 threshold and everything is overbought above the 70 threshold in our basic system. And we're going to want to see how this system performs. We are not going to be using any leverage. So we are basically going to compare what if we bought and sold in and out of the stock of the Apple stock. And then we are going to compare that to how Apple has performed overall. So a good trading system would usually outperform the asset that it is trading. That makes sense, right? So let us go over what exactly is going on right here. So first we have some initial validation. Validation like, does the RSI column exist? Does the RSI column have NaN values, which are basically non-existing values or empty values? We're going to define how we generate buy and sell signals. And that's very simple. When the RSI crosses below the oversold level, we are going to buy. And when the RSI crosses the overbought level, we are going to sell. And here we have a little loop that will define and track our positions. We're going to keep account of our signals. And we are going to use that to print out how many times we bought, how many times we sold. And as soon as we execute that, we can see that our strategy bought 49 times and sold 86 times. With those overbought and oversold values. Now, once again, this is a non-optimized strategy that is very basic. It's just buying when the RSI says price is oversold and selling when the RSI says price is overbought. So by no means is this a valid system already. What I want to do here is show you that if you optimize this, you can get way better results. You can optimize this with basic machine learning, which will basically map out exactly which parameters you can use, which is probably going to be very interesting for a lot of you guys already. This doesn't have to be an indicator. It could be your own rule set, your own strategy. Let's say you trade bullish or bearish engulfing candles. You can literally calculate over years of data how many times a sell or a buy would work and what ideal conditions would be. That can be time, it can be sessions, it can be how big the candle was, it can be how many consecutive candles it were, and so on and so forth. All right, so now that we've taken the trades and we know how many buys and sells we did, we can start plotting this on the chart so we can get a general idea of where our strategy in our system was buying and selling. We again do this by plotting. I'm not going to go into depth on how exactly we plot. This is all in documentation, but usually you can just ask a language model to do the heavy lifting for you, so you do not really have to bother with any visualization at all. So as you can see, these are all the buys and sells that our system made. And what is very, very reassuring is that it is all happening on the price, which means that our system kind of works. Because those of you who know how to code in Python or have created some quant strategy in some way or another, especially when you code from scratch, you could often see that the sell would be happening way higher or way lower than where you expect it to be. So this already looks pretty clean. I really like this. And again, here we can see the RSI indicator, and our sells should be matching the overbought levels and our buys should be matching the oversold levels. That's that. And it seems to be quite valid. So now it's time to actually backtest. Now it's time to backtest based on the signals that our system is giving. Here we define that we have an initial starting capital of 10,000 USD. And we are going to collect some stats right here. As you can see, daily return, strategy return, cumulative market returns, cumulative strategy returns, market value, strategy peak, strategy drawdown, and so on and so forth. This is where those beautiful calculations are happening. And this is where we calculate our Sharpe ratio. And right at the end here, we create a performance summary. And all of that, when we run it, basically looks something like this. We get an initial capital of 10K. Our final portfolio value is 15.3K, which means that our system made money. This, in a sense, is a profitable system. We had a total return of around 53.15%, but the market return, if we would have just bought one lot of Apple stock, we would have received a 461% return. The annualized return of our system is 6.13%, and the annualized market return is 27.24%. The Sharpe ratio is only 0.37%. And this is, of course, the annualized return with the annualized market return, then the max drawdown, which gives us this Sharpe ratio here. So once we visualize all of that by plotting the data, we can see that this is how our system looks like currently. So it's a big chunk, not too difficult. So this is our portfolio value over time. These are our cumulative returns in percentages. As you can see, this is just the value of our portfolio. These are the percentile returns, and this is our overall drawdown, as you can see. So what we can immediately see is that our system is very, very flatlining compared to what the Apple stock did. Now, of course, in this case where it went up, it is very good. But we can imagine that if a stock is continuously spiraling down, what we can instantly see is that it would probably tamper with that quite a bit. This would mean that we would not be getting a steep drawdown like we would get with a losing stock, which can actually be very beneficial. So even though that our system made less money than that Apple did, our overall drawdown and our overall upside was much more limited. So this means that this system probably works in very noisy markets that are very noisy in going up and down and do not really have a clear direction. That's what that's telling us right away. All right, so now that we know how our strategy performs in a backtest, we can actually start optimizing those parameters. So we are going to be optimizing those parameters through a grid search. Now, what is a grid search? A grid search will basically have every single bit of your input parameters and then spread those over a grid and test a bunch of possible combinations. So what we can see right here and how we are going to optimize, for example, is by changing the RSI windows. So we are going to change the window, which is basically the look back amount of candles. We are going to test everything between 7 and 22, and we are going to do that in steps of 2. We are also going to check the overbought thresholds between 60 and 81, and we are going to do so in steps of 5. We are also going to check the oversold thresholds, and we are going to do so between 20 and 41 in steps of 5 again. This is where the magic happens, where we have all of the calculations, and then this is where it will basically keep all of those results. And the best trades will be sorted to be on top. Now, if we run all of this, what we can see is we get a couple of warnings, which is saying that some RSIs have NaN values, which means that there is probably some polluted data in there. You should do some cleaning. It will not really affect our grid system because it's just ignoring them in our system right here. But overall, these are the results. So if we use an RSI window of 19, an overbought level of 80, an oversold level of 25, we will get a total return of 238%, which is very nice compared to what did we have? We used to have a return of around 53%. So this result is way, way better. Almost 5 times better, so that's super good. We have an annualized return of around 18.53%, a Sharpie ratio, which is very nice, of 1.15, and a max drawdown of minus 27%, which is hefty, but you know, this system was not traded with leverage. So a 27% overall drawdown compared to a 238% return is very good. I would sign for that. That basically means that for every $100 you gain, you only risk to lose around 10. So, I mean, who wouldn't take that, right? So again, here we list all of the best parameters, and now we are going to do a little bit of a visualization of what the optimization was telling us. And the equity curve looks like this now. So here we have the buy and hold versus the RSI strategy. And as you can see, it still limits the drawdown, but also limits the upside. It's more stable, but it does give consistent gains, which does look pretty damn good. Feel free to pause if you want to read through any of these statistics, but I will go more in depth in the next visualization where we compare all of the ratios we did in the previous backtest. Here we can see some distribution charts, Sharpie ratio chart, and our top 50 parameter combinations, all tested, all nicely sorted in a grid. And as you can see, the lighter, the better the return. So the lighter the dots, the better. So now that we know that we've actually optimized very, very nicely, let us go down and validate all of this with those best parameters in the backtest that we previously ran, but now with different parameters, just to validate that our optimization was correct. And what we can see is that our expectancy basically matches with what we are returning, which means that our backtest is successful and our optimization was successful. So if in 2018 we started with a portfolio value of around 10K, we would now have 33K. Or almost 34K, which is very good if we keep in account that we did not use leverage. Once again, we didn't use any leverage here. So this is a beautiful, beautiful result. All right, so here we just do all of the plots again of that backtest, and we can see that this is how our portfolio value over time grows. So in dollar values here, again, we have the cumulative returns in percentage. So very nice. Again, some very steep drawdown that we really miss out of, or at least limit. But then again, also some very big periods of trending markets will be cut off. And that is simply because this is a more conservative system. It's not going to participate in those long runs. No, it's rather going to balance itself out and focus on deviation trading rather than trend following. So this is the result right here. And now it is time to basically check for overfitting, which is very important. You always need to check for overfitting because it could very well be that if you update a data set over the series of 7 years like we did, it might not work on other years. So overfitment checks are very important and you should do this thoroughly. Now right here, I have a very basic overfitting check where we basically split our data set into a 70% training data set and a 30% testing data set. And this is the outcome of that. Now, we did that with random values with 70 and 30 just to validate that our optimization system is not in fact overfitting. And what we can see is that the results are pretty consistent. So our conclusion is that the strategy works in both training as well as testing periods. Now, of course, we can change these numbers to that of the actual optimized parameters, of course, which means that I believe it was 19, 80, and 25. And this is that result right here. So we can see that our training set yielded a total return of 148% and our testing return of 22%. Now, if we multiply that a little bit, because of course our training compared to our testing is 70-30, we would get a close and similar-ish result. Now, in an ideal scenario, what you would do is you would still cut your training versus testing in periods of 70% training and 30% testing, but the 30% testing should be the latest possible dates. So preferably if you, and let's make a very easy calculation, if you are trying to optimize a system starting from 2015, then you should probably be training the system all the way to 2022. And you should perform your testing from 2022 till 2025. So that you have 7 years where you basically train and optimize, and then the other years to validate. And then you can, one, see if your system works and if your system still works and you have a good validation. Now, of course, a good way to do it is also this way, where you have a mix match. So you just cut out pieces where you train on, and then you also cut out pieces where you test on, which is what we did here. So in this period right here, we did some testing, but we did no training. It's a random cutoff. This also works, but primarily you want to test both correlations right here. So go very, very in depth is what I'm trying to say with with the overfitting testing, because overfitting is a thing, especially if your optimization runs for a very long time. It will be over optimized or overfitted. And that is something you definitely want to avoid. But as a conclusion, I would say that this system has potential. So using the RSI could be a very strong way of mitigating losses, but also giving back some profits to have a more stable system. If you stack some more indicators, some more confluences, some more parameters of your own systems onto this, like specific trading days in this instance, or news trading, stuff like that, you will be able to create a very good system that could potentially outperform the asset that you're trading. I would say that this optimization was a great success, especially because we had a basic system and we managed to optimize it to perform almost 5 times better. So that is pretty damn good. So we did learn quite a few things today. We learned how to develop a strategy, how to optimize those parameters, how to detect overfitting, and also how we can evaluate performance by the use of plots and other data. So again, some very important considerations are the risk of overfitting, out of sample testing, so always test on data that you did not train on. Simplicity versus complexity is key. I find that simple systems are always a lot easier to develop and to optimize than complex systems, because the more complex it gets, the more patterns that machine learning or grid systems start to see. And in the long run, they are just a lot less robust, in my opinion. Take into account that there are market regimes, trending cycles, volatile cycles, non-volatile cycle. Keep all of those into account when you are working with a strategy. So make sure to keep it simple, that you are able to adapt quite quickly, and that an optimization test doesn't need 5 to 6 months to run, because at that time, a regime could already have changed. So some next steps that you could do with this basic foundation is test robustness, meaning over different market conditions, different time frames, and even different assets. So test it on your favorite Forex pairs, test it on your favorite futures pairs, crypto, whatever. You should also think about risk management, possibly with leverage, and try to simulate real market conditions. Do not just develop a system, see that it is not outperforming the market and drop it. As soon as you are able to create a system that creates an upside, you are already up there in the top 10% of traders, because as you know, more than 90% of traders are losing money. So if you find a system that's actually able to continuously make you money, continue to work on that. So continuously evaluate what is your system doing right and what is it doing wrong, and try to adjust with that. You can do all of those things with GPT or another language model. So if you are unsure about what to do next, just go to GPT, take your time to type out a prompt and say, hey, what should I do next? Or should I drop the system? Should I not drop the system? We have to accept that language models these days are way faster and way smarter than us in reasoning. So definitely do not be afraid to use their help. But of course, always take it with a grain of salt and be smart about what the answer is. Do not get influenced too much. And again, I like to stress this quite often. Before you even think about committing real capital, always first simulate, backtest, paper trade, because in a paper trading environment or a demo environment, you cannot lose money, and trading is risky and you have the chance of losing a lot of money. Of course, all of this information was purely educational. I do not encourage anyone to start trading with real money right now, right away. Other than that, I hope you enjoyed the video. If you do have any questions, just leave a comment or join the Discord server. It does take me quite some time to make these videos, so if you want to show some love, feel free to do so. And other than that, I'm already looking forward to recording the next video for you guys. Have a wonderful rest of your day, evening, morning, whatever it is where you're at, and I will see you in the next one. Thank you so much. Take care. Bye.